My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, I'm just trying to make you a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. The consumer is going on a cruise. She's booked up in Norwegian, Royal Caribbean, Carnival. No, she's actually flying long distance using Delta United. Oh, hold it. She's spending like crazy on luxury goods overseas, at least according to the MasterCard data. And she's going out to dinner after work from home, says American Express. Oh, no. Oh, wait a second. Consumers pulling in her horns, face of inflation. She's shopping at Lowe's for Stanley Black & Decker because she can't sell her home because rates are too high, so she might as well refurbish the darn thing with a new ASIC deck, maybe throw some Sherwin-Williams paint on it. But she's not working out as much as before, and she's drinking less, at least according to Planet Fitness and Diageo. At which point I say, oh, wait a second. Hold it. These data points, which is what I live with every single day, every minute of my life, these data points, they're driving me crazy. And that's actually somewhat easy to do. But really, they are. See, the market's reacting to every twist and turn of the consumer right now, and it seems to have the memory of a mayfly. I mean, look, today the market started weak, turned positive, sold off again, Dow dipping 67 points, S&P backsliding 0.25%, NASDAQ declining 0.1%. But a lot of this flopping and chopping is precisely because people can't figure out if the consumer is retrenching or out of gas, maybe already beyond her means. None of that's good, and it's got people wondering if this market has moved up too far, too fast. Now, look, I think it is time to admit something. And look, this is hard for strategists to admit, hard for analysts to admit, but perhaps we just can't game the consumer right now. Maybe it's just too difficult. Maybe it's not fruitful. I know my views are the minority, but sometimes you got to know when you don't know. Look, I get it. There's endless pontification about what the consumer's up to because we're in a consumer-led, service-oriented economy. Some 70% of our economy is based on consumption. So you better believe it's worth your while to figure out if the consumer's on the couch watching Netflix, ordering on DoorDash, or eating at Olive Garden, or hitting the road to go to Disney World. Although Disney stock's trading at a level that tells me that nobody's gone. But sometimes you have to recognize that we just don't have a bead on the consumer. And we can't force some interpretation on a confusing set of facts because that's how you end up losing money. I don't recommend selling Tesla because Ford's no longer making as much money on the Mach-E. I don't recommend dumping Take-Two because Electronic Arts missed a quarter. You can't extrapolate from a single company to the rest of the industry, especially not in the environment. So, what do you do? This one's tricky because, like so many different pursuits and plans, everything major was driven by COVID for a long time. That's why we're endlessly contrasting 2023 to 2019 as if the years were contiguous. Like everything just froze during the pandemic and we can just asterisk the whole period. But let's look at what really happened. During COVID, people hunkered down and stopped going to the office or even the store. They decided to make a room of their home into an office and felt safer outdoors, except when they were on Zoom. They cleaned everything with Clorox. We've got them on tonight. And they got vaccinated, Pfizer and CVS and Walgreens. They used the Pfizer vaccine. And they were docu-siding and buying a lot of furniture, even second car, so they could tool around the safe new country homes. Food prices ran up. People started snacking like crazy. Young people stopped paying student loan debt. Older people went to Williams-Sonoma, specifically West Elm. As soon as the pandemic was over, almost every one of these companies saw their stocks collapse. We called it the COVID hangover, and many of these stocks like Pfizer, like Walgreens, like Zoom, have yet to recover. They've become pariahs. At the same time, when COVID ended, we'd seen enough. We recognized we were long on money, having saved enough and gotten enough from the government, and we were short on time because over 1 million Americans just died in a pretty short period of time. So we started traveling like crazy and stopped buying goods. We did that until everyone went on a cruise or got priced out of a cruise, and it got too expensive to fly overseas. So, present day, here we are, 18 months after the last real wave of the pandemic, and many analysts keep predicting that we're in the twilight of the post-COVID plays and that the consumer is out of gas. Car sales are indeed slowing. Travel receipts, both domestic and international, are slowing. Going out to dinner, slowing. Shopping for clothes, slowing. We're even hearing that there are credit cracks. Last night, PayPal said there were some payment issues. We will talk to Etsy later tonight. I think the stock's very cheap, but the greatest craft site on earth is saying that they're seeing some of the less well-off customers spending less on gifts and more on essentials. So, what do we do? What's a stock picker like me to do? What are you listening to me for if you just heard that litany? How about this? How about going to what we do know instead of guessing about what we don't? I mean, I absolutely love to extrapolate more than anyone. More people are gambling on DraftKings, so that tonight. More people are grilling on Kingsford, says Clorox. But I like to get down to the real nitty-gritty of making money. Very specifically, I care about two of the largest companies on Earth that reported this very evening. I care about what was just said about Amazon and Apple. In many ways, they themselves are the economy, in part because the two names combined make up more than 10% of the S&P 500, but also because they're two of the most important Magnificent Seven members, and they're the most top-of-mind companies on Earth, with the possible exception of Tesla. Tonight, Amazon reported the kind of numbers that I would have considered impossible just a couple quarters ago, when the whole company seemed to be, frankly, in disarray, and I called them out for that. How's the consumer? Amazon had its biggest Prime Day ever, with more than 375 million items sold. North American segment sales were up 11% year over year. That's double-digit numbers for a gigantic company. Almost inconceivable. Speaking of double digits, how about Amazon Web Services, the big profit center for Amazon, growing at 12% in the quarter? Technically, consensus estimate was 10% growth. But there was a real fear, and I know I had it, that AWS could actually fall to the mid-single digits. I said it on air. And it's not easy to generate $7.6 billion in operating income when Wall Street was only looking for $4.72 billion. The costs that I was so worried about, because I thought they were spending too much, those almost seem to be things of the past. Thank you, Andy Jassy. CEO. A real thing of the past. Amazon's on fire. Amazon says stop fretting about the consumer. Amazon, which spoke an hour ago, is telling us she's fine. I'm taking them over everybody else I mentioned and then some. Right now, how about Apple? A little more complicated because the stock has had a big run. Once again, it was a quarter of outstanding performance, which makes people yawn these days, except for me. It was a tremendous theme of share take worldwide with an incredible service business. This quarter's services records came in at $21.2 billion, nearly $500 million above expectations. So many people are signing up for so many products that you now have a bridge until we get to the next iPhone model. That's right, we're still dealing with the 14. Now, I got to speak to CEO Tim Cook this evening, and we can get all granular about a multitude of superlatives, from the excellent China phone sales to the astonishing number of devices now installed worldwide, to the customer satisfaction scores, which are unheard of, to all of the countries that just are shooting the lights out, and there's a lot of countries. That's not going to help you, though. What you need to know, and how I feel after speaking with Tim and his team, if you're going to own the stock and not trade it, is that there is a level of excitement brewing right now for a new device that could make it so that we're going to have to stop talking just about handsets and watches and services and iPads and Macs. They may not be what we're talking about 18 months from now, which is the time frame I care about. I'm talking about the Vision Pro, which is nothing other than an explosion of senses that will be coming to you in 2024. This headset, which I've had the good fortune to try, will blow your mind. You will go to an Apple store and you will check it out and you will say, this is incredible. This thing allows you to go to places and see things that are impossible to imagine. I can just see, watching that last episode of Hijack with Idris Elba, lying down on my couch in my bed, because that's how great it is. Talking to my spouse, Lisa. In fact, when Tim and I talked, I explained the one thing I'm most worried about is the inability for people, millions of people, to see how amazing this device is. That's what his stores are for, though. Does anyone know how's the Meta stores, the Facebook stores? I don't have, but I got the bad mall. Can I say I got the shortest mall dynamic? All right, the stores will be the teachers. They'll show you why this VR headset is, I'm going to use this term, don't get mad at me, a bargain at $3,500. When you get all the sports you're going to see, might be tied in with ESPN, when you get all the concerts you're going to see, when you get that MLS you're going to see, when you get global football, as they call it, it may not be as expensive. Maybe there could be a buy now, pay later option anyway. I think there could be. Maybe a phone company might subsidize it as a way to get you to change carriers. I don't know, but I can tell you this device is coming and people will find the money to pay for it. And I want you to own the stock And Bridget, just Bridget, do not, I think, sell the stock until we see this thing in the stores, and then you can make up your own mind. The bottom line, how the heck can you doubt the strength of the consumer if Apple can put up such incredible numbers during a so-called off-cycle year, and Amazon can just shoot the lights out? Own Apple, don't trade it. And for heaven's sake, buy Amazon, because their consumers are doing just fine, and their consumers are practically everyone. Mike in Texas. Mike.
Booyah, Jimmy Chill, what's going on?
Chill Man is thinking about making some tomato sauce this weekend and pickles. I'll be chilling in my garden. I'm doing speed gardening. It's going to be really good. It's kind of like demolition derby gardening. I've got some other people who will compete. It'll be excellent.
Oh, I love that.
Yeah.
All right,
yeah.
Long time, first time here. We're talking about a consumer staple company. All right, things are falling off the back of the truck left and right, but this stock's been resilient. Since Q3 earnings, stock's been up almost 20%. But it looks like it might be breaking out of the technical pattern to the downside. I need your help here. Hold or sell, Costco.
Now, see, listen, this man offers me two options. He offers me hold, and he offers me sell. Does he offer me buy? Does he give me a chance to suggest that I think I would own the stock? No. He closes me out. And even though I like Mike in Texas, and Texas is a very big state for those who don't know it, it's a huge state. I have to say that if Costco came down even a little bit, I'd buy more for the charitable trust. That's how great it is. But because he said Jimmy Chill, I'm going to excuse his myopic nature and tell him thank you for calling. All right, bet on Apple, bet on Amazon, and bet on the consumer. Oh, man, tonight, Etsy reported a better than expected quarter, but fell today after issuing weaker than expected guidance for the third quarter. Hey, what's that? What's going on there? I think they have a big moat around their business. I'm going to talk to the CEO. Then, we're wrapping up chart week with resident commodity expert Carly Garner. With inflation cooling, should we be buying gold? A little counterintuitive. And Clorox made a big move higher after a smart move, fantastic move. Why don't we get to the top brass and find out how Clorox could go up so high and why it may not be done going higher. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.